Another trading session, another red candle in here on Tesla. What are we looking at here on the daily chart? Well, we have our Fibonacci retracement tool on here that we placed around a week ago, and we're going to leave that on here. We haven't breached any levels of importance, and we're holding this upper trend line here still. So where does that put us for our support? Because we are falling here like a knife, it seems like. 61.8 and the 50% fib retraces. We're going to leave those on there, which are right around 318 and your $351 areas. So we're trading right in there right now. Those are going to be our long-term kind of supports and resistances. Below that, it's not going to be that 300 level of psychological support. It's going to be down here. How far up is this 200 SMA going to run up? Currently, it's right at 271, which is back at this resistance from September, and there was also resistance here in October and November. So that's going to match up nicely here with our 200 SM, which is currently that 78.6% fib retrace level, which is all right there around that 270 to 271 area. If we zoom out here, you can see that we're zooming out further. This is about a year and a half now, that our lowest point here for our fib is no longer our lowest point on this chart, but you can see in the past that 78.6% fib was a problem here in July as well. And in, like I mentioned, September, and then going into October, November. So that is a big area of support for us, because you can see it was resistance here, resistance here, resistance here, finally broke. So if we do pull back below this 61.8, the 300 level is not going to be the level of support we're looking at. Is going to be down here, that 271, that 200 SMA. It really all depends on how much we consolidate and how much this 200 SMA runs up. If it does run up to the 300, then we are going to have a hiccup there before we pull back and then hit the 271 level. But really, if we kind of keep on going down, then that's going to be our big support. So where does that currently put us at immediately? Well, the 333 area right in here, this whole mess that we had back in November here, a little consolidation for about a couple weeks or so. That's going to be an area for us. So resistance wise, 333 and that 318, we're kind of trading in between both of those levels right now. So immediately 318 and the 333 level. But like I said, below that 318, it is going to be falling down there, and it's going to be that 271 or the 200 SMA, whichever does hit first in there. Now, option chain wise, what are we looking at? Well, you got about a $15 expected move by Friday. The February monthlies right around a $23 expected move. Your March monthlies right around a $44 expected move, and you got tons of IV in here. So you can really kind of play with whatever you want. If you're stuck in here in some calls, start selling some credit, something's down here to kind of pay for those calls and try to get some credit back. Or you can do whatever you want, because you got volatility in here. You can kind of play around however you like to kind of make up for this 3 red candles on the day in here, whatever you want to do. All right, guys, make sure to check us out on all of our social media. And we also have a Discord service if you are interested. You can find all of our socials in the description below.